Hey there, everybody. Thomas with Basecamp Trading. It is Wednesday, September 6th, and we are going to do another one of the Mistakes Traders Make series videos today. And what we're going to discuss is a mistake I see a lot of people making, and that is not understanding or not knowing the market that you're trading well enough before you actually start trading it. And today we're going to use a really good example from a trade we took in the trading room, well, after the trading room was over, but the setup that we've been following throughout the entire day. And that was in bonds, all right? And what we were watching was this channel bonds were in, and they had this well-defined support at 56 and 31 30 seconds. We could hit it, if you go down to like a 500 tick chart, we had hit it about 8 or 9 times before finally breaking here in the afternoon. But bonds, the 30-year bonds, they dropped from the break point at 56 and 31 30 seconds. They dropped down to significantly undervalued and to the low of about 18 ticks. Now, how does this tie into not knowing the markets you trade? Well, the reason it's important is because, as many of you know, bonds are correlated with each other. You have the 30-year bond, 10-year note, the 5-year note, the ultra bond, etc. And the further out you get, the more volatile the bonds are. So me personally, I didn't actually sell 30-year bonds. I wanted to have a bigger move, and I wanted to be able to benefit from the move as much as possible. So what I did is I sold the ultra bond. And what the ultra bond is it's 30-year plus bonds. So it's correlated to 30-year bonds, but it's longer time frame. All right, and it has more volatility. So you can see where the break point, you had the exact same setup here in ultra bond, and you had the break point at 170 and 3/30 seconds, and this dropped before bouncing and going into consolidation, which, speaking of that, you have a bear flag on a 30-minute price chart right now suggesting these are going to push down some more. But speaking of that, we broke out at 70 and 3/30 seconds, and the move from the breakout to the low was 25 ticks. So about 7 ticks more, or on a per contract basis, you're talking about a little over $200 per contract more worth of a move that you got on the ultra bond as opposed to trading the 30-year bond. Now, you can also go the other way and say, let's say you're trading a smaller account and you don't want to have as much volatility. You're looking to lower the volatility. Then what you would do is, instead of trading the ultra bond or the 30-year bond, you would actually go back and you would trade the 10-year note. And the 10-year note would move even less than the 30-year or the ultra. So, and it would be about $200 per contract less than the 30-year. So if you have the 30-year in the middle, ultra bond moved about $200 a contract more. 10-year note moved about $200 a contract less. So you can adjust which markets you are trading for these setups based on the volatility and the contract sizes. Another example of this is two correlated markets are RBOB and heating oil. And RBOB is traditionally, or usually, RBOB is more volatile than heating oil. So if heating oil has an average range of 100 ticks at $4.20 per tick, so call it $420 range, this is just hypothetically speaking, heating oil might have a 75 tick range if RBOB has a 100 tick range. So it'll move a little bit less, and the volatility and the risk is therefore smaller because the market doesn't move as much. So a big mistake traders make, just to recap this, is not understanding the markets that they're actually trading. So make sure you have a thorough understanding of what exactly you're trading before you start trading it, whether you're trading a more volatile instrument or a less volatile one, and you adjust it based on your account size. So that's all I have for you for today. I hope it helps. And don't forget to like and subscribe if you're enjoying these videos, and make sure you check out the rest of the series. There's about 20 videos now, or a little over 20 videos in the Mistakes Traders Make series. We've gotten some really good feedback, so I plan on continuing to add to this as we get more and more topics that come to my attention with working with different traders. So that's it for today. I'll see you in the trading room bright and early tomorrow morning. And by the way, bonds are pushing down on that 30-minute bear flag as we speak. And until next time, happy trading.